Hey, everybody, it's Bob a Trade Genius. Have my good friend Phil here with me. We're going to show you two charts today that normally we would be screaming at you to sell everything, but this time is different. We'll explain.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Phil, these charts we're going to show you basically tells you that there's no upside left, but there's still a little bit of gas in the tank, at least for through the summertime. Why don't you go through it and let's explain to people why we think it's going to get even more bizarre before we get the sell-off.
Yeah, let's dive right into it. So first thing, when we're looking for, basically a top coming in the market is retail participation, because invariably they're all in at the top. Doesn't mean the top is here right this second. It just means that we are in that scenario. So if you look here on this chart, this is global cash held by non-bank investors. So retail investors as a percentage of holdings of equities and bonds. So basically when this is dropping, it means they're more invested into the market, whether that be stocks, mostly stocks, or even bond holdings, like something like a TLT ETF potentially. But basically what this is telling us that they're as much in as they've ever been in the last 20 plus years. Okay. So cash holdings are at minimums. Most of that is being deployed into the stock market. Now, like I said, this doesn't mean like the top is in right this second, but it does mean that our scenario where we're looking for a blow off move is probably still in play. And this is one of the key ingredients for that, Bob. So now just timing those fundamentals. So I don't know how you view this. I think that that's, probably to be expected in this situation.
Yeah. And I think what happens, look, and institutions are looking, they need to sell to somebody. And I think they've been successfully now transferring risk over to retail. And now they're going to need a final blow off to get positioned for the recession that's coming. So I think it's going to be really interesting to see, because look, summertime, we never had a summertime sell-off. So I think they're going to rely on that, grind volatility down. Janet Yellen's going to be really accommodating. Next week, the Fed's probably not going to be hawkish, and we're going to probably get, and who knows, Phil, it might not even be 6-week move. We could get to our target in 2 or 3 weeks and then grind around too. So it doesn't necessarily have to say, buy this move next week and then don't look again to the end of August. We could get up there and camp for 3 months too. So you can't miss this move, because it's probably the last move you're going to get for a number of years.
Yeah, I think that's a good point. All right, the next ingredient for when we're looking for, basically a final top in the market, look no further than stock concentration. So, 5 largest companies as a share of the S&P 500 total market cap, right? This is what that chart looks like, 27% of the total S&P 500 market cap. We've just not seen this high of a concentration in any bull market, right? So at this level, Bob, really just screaming at you that, things are just really skewed. Really, we have issues that are not really reflective of what you're seeing on the headlines when it says S&P 500's up, whatever. If it was equal weighted, this would look much, much, much different, nowhere near what we're seeing. But it is a reliable indicator of when you do get toward these blow off moves. I mean, look at 2000, and I think we have a lot of similarities, as we've said, between the .com bubble and the AI bubble. And we're just destroying those stock concentrations, even from those levels, and really destroying stock concentrations from the great financial crisis. So of all the ingredients, this is probably the biggest one in terms of, the potential downfall. And that's why I think we're going to see that Eiffel Tower effect, where you get that big squeeze, big blow off. But because there's really no structural foundation to this move, as these companies start rolling over and the earnings and things like that start rolling over, because really without consumer demand, really, what are you going to be doing with AI? Who's going to be purchasing all that AI computing power? Right. And we know the consumer is rolling over. So ultimately, that's going to fail to propel AI earnings any further, because they're already priced in way ahead, right? Decades ahead in terms of earnings and even revenue. So I just think that now we have a lot of air under us. If this was much broader and we were down at under 10%, then I would say this is a monster rally, very strong, blah blah blah. But it's just not the case. It's more of an illusion.
Yeah, and now they're looking to squeeze things now. You saw GameStop being squeezed, and we're watching Tesla. Tesla has a chance for a $40 to $45 move here coming. It's done nothing all of 2024. It's been in a fairly tight range here since the middle of January, and that's the third most shorted stock by dollar volume. And NVIDIA was number one, and look what they did. They took the thing up $400. So I think there's potential move yet in Tesla, which is going to help the indexes. And there's still $1 trillion of buybacks yet. And we have Janet Yellen and the banks to throw money in it. I think this thing's going to come quick. We're going to probably get even more concentrated. And then this thing's going to be in the history books 50 years from now when people say, why the heck were people in the stock market? They should have known better. But, as the old CEO of Citicorp says, you got to dance while the music's playing. And fortunately, from guys like us, we could be scaling out here as we hit targets this summer and be prepared for the fall. And, if you trade with us, we're already making, a recession trade. And there's some really, really good things we can do and still get a lot of exposure and still get some good yield. And even while we're waiting for that sell-off to happen. So check us out, trade with us. And this is not going to be a boring summer, guys. It's going to be, I think, a lot of fun. And then the hangover hits. Phil, with that, I'm all done for today.
All right, guys. Thanks for watching. Check out our stuff over at tradegenius.co. We'll see you on the next episode. Take care.
Trade Genius.